Hi and welcome back to Cheeky Crypto. My name is Nick, and today, guys, we're going to be jumping down into the world of Bitcoin, reviewing what's been going on in terms of the latest news, the on-chain data, the liquidations, and of course the technical analysis as well. As I get into today's video, if you do find it useful and informative, smash that like button. I do appreciate that. If you are new to the channel, then why not go ahead and subscribe? By subscribing, you will be kept up to date with all the videos that we do here at Cheeky Crypto. And if you haven't yet joined us in Discord, what are you waiting for? Check it out, linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there. So why not go ahead and check it out? Let's jump right down into today's video, kicking things off with a bit of a roundup of the latest news for BTC. So as you can kind of see, and as you guys will probably be aware, obviously the Grayscale had their victory in court against the SEC, basically got their appeal approved. Essentially means that they can move ahead. The SEC, however, did delay several other ETFs. So a few things to kind of consider. Let's take a look at what else is going on. So we have the travel rule coming into effect in the United Kingdom. Basically, crypto asset businesses in the UK could now begin withholding certain crypto transactions to comply with the new travel rule for crypto that came into effect last week. So basically, from now on, any inbound payments that are received from a personal entity from an overseas jurisdiction that hasn't implemented the travel rule basically might see the virtual assets service provider basically making a risk-based assessment as to whether or not the crypto asset is available to the beneficiary. So that is in action now. So we'll have to kind of be a little bit cautious with that and all that kind of good stuff. So make sure your transactions are legitimate, and I think you're going to be okay. But of course, I think we're going to start seeing withheld crypto here and there as this rule starts to kind of embed and people get a bit more comfortable and used to the processes that sit in the background. First, unregistered securities sale claimed against an NFT offering in the United States. So again, the SEC are throwing things and seeing what sticks. So the SEC has accused Impact Theory, a media and entertainment company headquarters in Los Angeles, of engaging in unregistered securities transactions by selling non-fungible tokens, NFTs, to investors from October to December 2021. Again, I think it's about $30 million that were raised through those NFTs. And yeah, so again, we'll see how that kind of plays out. Overall, crypto declared a property by a Chinese court, which is interesting. So People's Court in China published a report on the legality of virtual assets, analyzing the criminal law attributes of these digital assets. The court noted in its report that virtual assets under the current legal policy frameworks are still legal property and protected by law. So some interesting stuff kind of going on in and around the space. But other than that, it's been reasonably slow over the last couple of days in terms of news. So expect stuff to start to heat up soon. Usually you get a few days where things are quite quiet, and then a whole host of stuff just kind of drops on you. Let's go ahead and move on over into the world of on-chain analytics. So membership.cheekycrypto is our website. We do have a 7-day free trial across the various different plans. In here, we have everything from what we call the base level through to alerts and trader level. And of course, some additional benefits as well, or additional perks like education or data, right? And it's going to be the data perk that we're going to be talking about. This is actually additional to the existing plans, but there is a plan here called the Mega Pack, which basically includes absolutely everything. And there's free trials across the board on all of it. So you can test it all out before you kind of commit to it long term. I think if you were to test it out, though, I think you'll be pleasantly surprised, and you probably are going to want to continue. That's kind of what we're saying. Have a 7-day free trial. Now, if you did want to cancel after taking a 7-day free trial, go to your profile area, go to the subscriptions and cancel. If you do not cancel, you will be charged. What we're going to do, though, is we're going to head over into the data zone. We're going to go over to the Bitcoin data, because there are some things going on here. Let me find the right one. Data here. There are some things going on that we need to know about in terms of the on-chain data and liquidations and things like that. So we have the overview here. Nothing terribly too much going on different in terms of what's going on previously. We have 19,476,681 BTC out in circulating supply. Daily issuance is about 900 to 800 or 800 to 900 or so Bitcoin. And again, it's quite a small amount. It's more important to think about the millions of Bitcoin that's currently out there rather than the issuance, which means basically a Bitcoin halving has less impact now than it did before because we already are incredibly close to the maximum supply, right? So just bear in mind that the circulating supply is the most important thing along with demand. Otherwise, there isn't terribly too much more to note from the overview. Let's go ahead and take a look at the liquidations, because these are incredibly interesting liquidations, right? So $15.3 million of liquidations across Bitcoin in the last 24 hours, right? BitMEX was the exchange with the most amount of liquidations at $7.96 million of liquidations. Okay, this is very, very unusual. I'm going to get into why in a moment. Across Bitcoin, 91.03% of positions that were liquidated were long positions and 8.97% were short positions. Okay, so we have a little graph here, and you can kind of see the stacked up positions of these different exchanges, right? And then you can see BitMEX being incredibly unusually high. In fact, it totals 51.96% of all Bitcoin liquidations from that singular exchange. But it's worse than that. In fact, if you take a look here, BitMEX being 51.96% of all liquidations, 100% of the liquidations at BitMEX were long positions. Okay, so it's very, very unusual that you have everything 100% stacked in one particular direction at this level, specifically when there's $7.9 million of liquidations. 100% of those liquidations were all long positions. So very, very unusual. And again, this is how we spotted FTX when FTX were having financial issues. So I'll pull it out there. I mean, I don't know. All I know here is that it's unusual activity to have BitMEX as high as it currently is. It hasn't been this high for a very long time, and it is above that of Binance, OKX, 𝗕𝗓𝗄, Bybit, and so many others. It's very unusual to see BitMEX with this level of liquidation. It's more unusual to see this level of liquidation all stacked in one particular category, long positions. So something in my mind is wrong here. It's either the exchange is liquidating because it needs to, it's insolvent, or it requires some funding, so it's liquidating to try to get as much funding as it possibly can. This is what was going on with FTX. Alternatively, there's something wrong with the API call or API data coming from BitMEX, and that is basically skewing out the data here. Ultimately, I do not believe the API issue is something that sits with me, because nothing here has changed API-wise. The same API that is pulling in Binance data, OKX data, 𝗕𝗓𝗄 data is basically doing the same for BitMEX. So if there's an issue with the API or the underlying data, it sits BitMEX side, not this side with us, right? So we have to understand that, okay, so if they have got $7.9 million of liquidations and they're all 100%, why is that? What could that mean? And what do we do as retail investors? Well, the standard thing that we would do here is basically make sure that we haven't got our assets on BitMEX. That's risk management number one, right? We want to make sure that we protect ourselves. It's not to say that we do not use the exchange. What we do here is we essentially make sure that we're using proper cold storage, such as ledger, hardware wallets, things like this, that basically minimizes our exposure to exchange insolvencies and things like that. So by using your own hardware wallet or soft warm wallet, those kind of things, you're basically preventing your assets being used to pay back the creditors of the exchanges should the exchange file for bankruptcy, right? And so therefore it's important that we do not have our assets on BitMEX, for example, but obviously all exchanges, unless of course we're using it for futures market trading, and in which case, we're going to have some on there. But again, you use proper risk management. You don't keep a whole host of funds on the exchange. You use what is you're using a reasonable amount for your trading portfolio. You don't have to have that overly too large. You can also, of course, there's proper risk management that you associate with trading activities. So that's the first thing we're going to obviously have to do. The second thing you have to do is dig down deeper, maybe reach out to them, find out why, and all of these kind of things as well. So very unusual, BitMEX being the way that it is right now, with those really high liquidations all stacked in one category of long positions. Okay, we know that it should have been weighted heavily towards the long positions, 91% being longs that were wiped out versus 8.97. But if we take a look at Binance, for example, where it's well balanced, you see it's 76% longs, 23% shorts. Take a look at OKX, 77% longs, 22% shorts, right? And so when things get a little bit in Bybit as well, 81.18. But when things are a little bit more imbalanced, it becomes very unusual. CoinEx, for example. Now, CoinEx only had $232,000 of liquidations, right? 96% of those were long and 3.1 were short. Deribit was $33,000 all long positions, right? So the smaller the value, the easier it is to kind of, have that imbalance between longs and shorts. The higher the value, though, the more balanced it becomes. And you can kind of see that as we kind of work our way up these rankings. And the only reason in my mind that it wouldn't be is if something is afoot or something is irregular at the exchange level. So kind of keep an eye on that, guys. I think it's one to be really cautious about. Let's move over into the on-chain data for the number of wallets that hold specific amounts of Bitcoin. Okay, now we have got this little spike here on price. That's just my calculation. I need to just change that, but that was just for today. That's fine. So for the most part here, what do we have? Well, we have 1,000 BTC or more per wallet. There's 2,013 wallets that have over 1,000 Bitcoin. And you can see that consistently over the last year, they're just down by every account. So if we just take a look at it in the last 7 days, it's down 0.4. Take a look at it over a 30-day period, it's down 0.15. Take a look at it over 90 days, it's down 0.69. Take a look at it over 180 days, it's down 0.1. And if we take a look at it over a year, 365 days, it's down 6.2. This tells us that there's actually consistency here with the downward selling pressure from these wallets. Essentially, they're not really wanting to back the price of Bitcoin. They've used the move to the upside as exit liquidity for their positions, which they continue to do. And you can see the black line here, the number of wallets that had over 1,000 Bitcoin. Right? You can see how they started selling in February of 2021. And they can see that they used that pump to the upside as exit liquidity. You can see that when the price pushed back up again, there was more exit liquidity. And when price pushed down towards $32,000, you see that they jump back in. Price jumps up to 48,000, and then they just use all of that as exit liquidity again. Okay, and they're just aggressively coming out of their positions. And so we need to be very aware that the behaviors here are very clear to us that large investors with substantial amounts of capital have not been backing the price of Bitcoin. There is one exception, of course, and that is the 10,000 Bitcoin or more per wallet. Now, 10,000 Bitcoin is very, very hefty, right? It's a nice amount. It's an institutional level. And again, we are talking about people who are very calculated in their approaches rather than those that are emotionally reacting, okay? Now, 10,000 Bitcoin or more, there are 107 wallets. And again, you get a very similar story for the last 180 days, down pretty much on all metrics, right? Last 7 days, down 0.93%. Last 30 days, flat, no change. The last 90 days, down 5.31. Last 180 days, down 6.96. Okay, now in the last year, they're actually up 9.18%. Now, that's because, historically speaking, these wallets have been used to accumulating during the bear market and then selling to bring in the bear market lows. And it's no exception in 2022 where they accumulated heavily all the way until the end of 2022. And then, of course, as we start to see this move to the upside, what happens here is they start to aggressively come on out. This is not a positive look on where Bitcoin could be going, specifically on this short-term move, this very corrective move to the upside, this bear market rally that we had seen in 2023. Okay, so when we take a look at these things, it's quite obvious to us when we take a look at their behaviors that they look at this move to the upside as just exit liquidity. And unfortunately, that means that the people who have been buying their Bitcoin happen to be the retail investors, and they haven't exactly, don't share that same opinion. Instead, they have been providing the funding for the larger institutional level investors to exit Bitcoin. And I don't know how sustainable that is. And of course, splits opinion, because a lot of retail investors are saying they'd never sell their Bitcoin. And that's fine. If you're never going to sell your Bitcoin, that's perfectly fine. I don't think we're going to see a mass sell-off of Bitcoin at the retail layer. I suspect that what we'll actually do is see Bitcoin retail investors selling off maybe 30%, right? So if we are 1 million Bitcoin at the 1 Bitcoin layer, right? So this one here, one Bitcoin or more per wallet, expect about a 30% sell-off. That's not every retail investor selling. The majority of them will hold, but there will be a pocket where there will be significant selling pressure, and they're the ones that are the most vulnerable, right? And so 30% reduction in these wallets is about 300,000 Bitcoin. It's not a small amount of Bitcoin, right? It's 300,000 Bitcoin that could drag the price of Bitcoin down as the supply and demand imbalances. So just kind of bear these things in mind. There's a lot of different things to kind of consider here when it comes to the price action and all that kind of good stuff. So just kind of bear these things in mind. I think there's a lot to kind of consider when it comes to Bitcoin. And all that kind of good stuff. I just noticed that my camera just died here. I'm not sure why. So I'm trying to get that fixed. Okay, so that camera died, and we'll just carry on with this camera. A little bit less quality, different angle and all that kind of good stuff, but let's carry on. So we're going to jump into the technical analysis now. We are going to be starting things off with the 1 hour time frame. So here we have Bitcoin paired up with USDT using the BitGet spot exchange. Now, following on from yesterday, we were kind of expecting this move to the downside here. We can kind of see we've kind of completed the Z wave, in my opinion. We will be looking at, actually, let's just go ahead and just quickly reflect on that for a moment here. So we did pull back down as expected, and yeah, we came down a little bit deeper actually looking at it. This is going to change our outlook to the upside just a fraction here, so we'll go ahead and just review that. So basically, unless we drop down lower than the 25,337, we have this move to the upside to consider. Okay, this move to the upside is targeting out just here. It's basically going to be 26,366 to 26,557. That will be our C wave pattern of our correction to the upside. This is basically after we had this 5 wave drop to the downside here. This is just a nice healthy correction. Now we're targeting out equilibrium, and so we might find ourselves with a WXYXZ rather than an ABC structure here. Just take out the equilibrium and the fair value gaps that you see in red just up here. These are created from imbalances in the order books, essentially a lot more selling pressure than buying pressure. So you can't just sell Bitcoin if there are no buyers, right? So the price has to find where the buyers are, and they were down lower. So selling pressure here basically brings them price down until it finds buyers to sell their Bitcoin to them. And of course, we continue this move to the downside. It's a liquidity-based issue. And so when we see this corrective up here, correction back up here, it's basically looking to kind of fill out some of those gaps. Not guarantee, of course, because we can, of course, just start to move on down from this range anyway. So just kind of keep that in mind. Ultimately, we start with 5, we must end in 5. And if we bring this up into the daily time frame, you can see that what we're really talking about here is a 5th wave movement to the downside, where we target out 22,693 to 23,874. And this would be a 5 wave pattern. We've just completed 5 coming down. We're talking about a wave 2 being that correction upwards. We then come down into a wave 3, which will be another 5 wave move up into a wave 4 and then down into a wave 5, ending somewhere in this range between 22.6 and 23.8, right? So that's kind of the idea here. Essentially, we're just moving down. And again, this is a 5 wave pattern. So once this completes, we expect a bigger swing upwards. And then, of course, further to the downside, another 5 wave pattern. Okay. And again, that will then be testing out some of these and taking out these fair value gaps that we saw earlier in the year. So everything here is kind of moving along on that journey at the moment. Nothing else has really deviated away from that. It's something that we kind of just expect to kind of play out gradually over time. Taking a look at the weekly time frame, you can see right now that we are testing the support level of the 200 EMA. This is 25,672 based on USD rather than the stablecoin. You can see that we've been basically stuck between the 50 and the 200, the 50 being the red line, the 200 being the white line. And these exponential moving averages essentially are just showing you long-term and short-term price action. And so we can see that we are steadily working our way down. We're trying to kind of complete structure. And of course, depending on whether or not we get a closed position below the 200 EMA, could be an indication of very bearish times to come for Bitcoin, right? And of course, there's going to be a huge knock-on effect when it comes to the remaining altcoins as well, right? Many of those altcoins will also bleed out as well. We saw AVAX most recently hitting new bear market lows, and I think that's going to continue for a while longer yet as well. So everything from a technical analytical point of view is still very much on track as per the previous videos. Nothing too much there has changed or is different, and all that kind of good stuff. So I think, guys, we'll keep it nice and brief and just wrap this video up right there. If you have found it useful and informative, smash that like button. I do appreciate that. If you are new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. Until the next one, though, guys, have a fantastic day.